Hey everyone, welcome back to We Are Cosmic, your go-to channel for everything crypto, finance, and how these new technologies are changing the world. If you're new here, hit that subscribe button because today we're diving into something truly massive, something that could completely transform our financial system. We're talking about Ripple, XRP, and the future of money. I promise, what you're about to hear will give you a perspective that most people simply don't see yet. Let's start with a big idea. Imagine trillions of dollars, yes, trillions, moving seamlessly across the world, on-chain 24/7, without borders or unnecessary delays. This is the reality that Ripple and XRP are aiming to create. It's not just crypto hype. We're talking about real-world assets, retirement funds, investments, and the backbone of global finance transitioning into tokenized digital forms. Think of liquidity, billions, even trillions of dollars, flowing smoothly anytime, anywhere. That's a game changer. So why is this happening now? Traditional finance has been slow. Banks, governments, and institutions move money in clunky, outdated systems that often take days, cost a lot, and are prone to errors. RippleNet changes this. XRP powers a system that settles transactions in seconds, not days. Banks and institutions are already integrating it. We aren't talking about theory here. We're talking about actual adoption happening behind the scenes. Ripple isn't experimenting. They are building the infrastructure quietly, corridor by corridor, that will make digital finance faster, safer, and more efficient than ever. Here's something even more exciting. Experts estimate that over $100 trillion in global assets could eventually be tokenized. That's every stock, bond, and derivative you can imagine. To put it in perspective, the entire crypto market today is around $3 trillion. The tokenization of traditional assets could literally dwarf the current crypto market. XRP is at the center of this, serving as the bridge and neutral liquidity tool that allows these trillions to move quickly and securely. Once assets are tokenized and live on blockchain rails, they become more flexible. They can be used in DeFi as collateral or even programmed into new investment portfolios. Now let's talk about institutions. We're not just talking small players. Companies like S&P, Fidelity, Franklin Templeton, and even major banks like Bank of America and Cross River Bank are actively exploring tokenization and blockchain integration. They're seeing the same thing we're seeing here. XRP is the infrastructure that enables the future of finance. Reports show that adoption isn't slowing, it's accelerating. Even when the market dips, institutional interest in XRP continues to rise. Let's dive deeper into one of the most exciting aspects of Ripple and XRP, tokenization. Simply put, tokenization is the process of turning real-world assets, like stocks, bonds, real estate, or even fine art, into digital tokens that live on a blockchain. Once an asset is tokenized, it becomes programmable, instantly transferable, and accessible 24/7. Imagine owning a piece of a global asset and being able to trade or use it any time without relying on slow, traditional banking systems. That's the future Ripple and XRP are helping to build. Experts estimate that the total global financial assets today exceed $350 trillion. That's a mind-blowing number. Right now, only a tiny fraction of that is tokenized, but the potential is enormous. Ripple is positioning XRP as the bridge currency that allows trillions of dollars of tokenized assets to move seamlessly between parties. Why does that matter? Because without a trusted, fast settlement layer like XRP, tokenized assets are just theoretical. They can exist on paper, but they won't flow in real markets efficiently. XRP solves that problem. Now think about adoption. Big financial institutions like JP Morgan, Bank of America, S&P, Fidelity, Franklin Templeton, and even the Solana Foundation are exploring tokenization. They're asking the same question. How big is this opportunity? The answer is staggering. We're talking about potentially $1.5 quadrillion worth of assets globally that could eventually be tokenized. That includes everything from equities to derivatives. To put it simply, tokenization isn't just a trend. It's a revolution in how value is stored, moved, and used globally. Tokenized assets have several advantages over traditional assets. They are faster because settlement happens in seconds. They are more flexible because they can be used as collateral in DeFi protocols or included in programmable investment strategies. They are more accessible, allowing anyone with internet access to participate in global financial markets. And they are more secure because blockchain technology ensures transparent and immutable ownership records. This is why XRP is so important. It provides the infrastructure to make tokenization practical at a global scale. Another key point is timing. Some people think this shift is far away, but the reality is that institutions are already moving. RippleNet is being integrated by banks and financial services companies around the world. XRP isn't speculative in this context. It's a tool being used to solve real problems. As more assets are tokenized and move onto blockchain rails, the demand for XRP will naturally grow because it is the fastest and most efficient way to settle cross-border payments. It's also important to note that tokenization doesn't just benefit crypto enthusiasts. This affects everyone. Retirement funds, mutual funds, insurance portfolios, and even central bank digital currencies could all become tokenized in the coming decades. This makes the XRP ecosystem critical for the broader financial world. Traditional banking systems aren't going anywhere overnight. They'll gradually migrate to digital, tokenized systems using layers like XRP and RippleNet. Now that we've covered the massive opportunity of tokenization, let's talk about the backbone that makes it all possible: RippleNet and XRP infrastructure. If tokenized assets are the liquid money, then RippleNet is the plumbing that moves that money around the world quickly, securely, and reliably. This is what separates XRP from many other cryptocurrencies that exist mostly as speculative assets. Ripple is building real-world financial infrastructure, and major banks are already integrating it. RippleNet is essentially a global settlement network. It connects financial institutions across borders, allowing them to move fiat, digital, and tokenized assets seamlessly. Traditional cross-border payments are slow, expensive, and cumbersome. Sending money internationally through SWIFT can take days and involve multiple intermediaries. With RippleNet, settlement happens in seconds, liquidity is unlocked on demand, and costs are drastically reduced. That's why institutions see XRP not just as a cryptocurrency, but as a strategic tool for payment efficiency. Several major players are already adopting this technology. Bank of America, Merrill Lynch, Cross River Bank, and others are testing or actively integrating RippleNet. For example, Cross River Bank is using Ripple to connect stablecoins with traditional fiat, creating a bridge between the old and new financial systems. This isn't just an experiment. These banks are building real infrastructure that will support faster payments and tokenized asset movements in the future. One common misconception is that blockchain exists to replace traditional banking. That's not true. Blockchain, stablecoins, and XRP extend banking capabilities. They provide speed, efficiency, and flexibility that legacy systems cannot match. For example, once Ripple and XRP are fully integrated into systems like FedNow or FedWire, institutions could process trillions of dollars in payments instantly. This is enormous because the United States alone processes $5 to $7 trillion per day in these systems. Imagine XRP acting as a bridge to make those transactions near instantaneous. XRP's role as neutral liquidity is crucial. It doesn't compete with banks. It helps banks move money faster. Whether it's fiat currencies, tokenized assets, or digital currencies, XRP ensures liquidity is available when and where it's needed. Unlike many other cryptocurrencies that are volatile and speculative, XRP is designed for real-world financial operations, making it attractive for institutional adoption. Another key point is gradual integration. Ripple isn't aiming to suddenly replace SWIFT or legacy systems. The reality is, financial infrastructure evolves in layers. Old systems integrate with new systems over time. XRP provides a layer that works alongside legacy rails, enabling interoperability with central bank digital currencies and tokenized assets. This layered approach ensures stability while driving innovation. Banks can transition safely without disruption. We've also seen real data supporting adoption. Exchanges like Bitrue report surges in XRP purchases by institutions, indicating growing confidence. Even during broader market downturns, inflows into XRP and other infrastructure-focused assets like HBAR and Solana remain strong. This shows that institutional investors recognize the long-term value of XRP as a foundational tool, not just a speculative token. Now that we understand RippleNet and XRP infrastructure, let's look at the real-world impact, how Ripple is connecting with banks and enabling cross-border payments that actually matter. This is where the rubber meets the road. Ripple isn't just building technology for the sake of it, they're actively integrating with financial institutions to solve real problems in global payments. Cross-border transactions are notoriously slow and expensive. For years, banks have relied on SWIFT and other legacy systems that often take several days to settle payments. Ripple is changing that with XRP-powered payments, which settle in seconds. This speed isn't just a convenience, it's a massive efficiency gain. Businesses, banks, and even individual users can move value anywhere in the world instantly. That's a huge advantage, especially for institutions handling trillions of dollars in daily transactions. Major partnerships demonstrate this adoption. Bank of America, Merrill Lynch, Cross River Bank, and SCB Siam Commercial Bank are integrating RippleNet to enhance payment efficiency. For example, SCB has used Ripple's network to enable real-time payments between Japan and Thailand, powering cross-border transactions that were previously slow and costly. These case studies show that Ripple isn't just talking about potential, it's delivering results in the real world. Stablecoins also play a critical role. Some people mistakenly think stablecoins are trying to replace traditional money. In reality, Ripple uses stablecoins to bridge fiat and digital systems, making transactions smoother without disrupting existing banking operations. Cross River Bank, for example, uses Ripple's technology to connect regulated stablecoins with traditional banking, creating a hybrid system that combines speed, regulation, and reliability. This is a key part of the future digital economy, and XRP sits at the center of it. Ripple is also positioned to integrate with upcoming U.S. payment systems. The FedNow initiative is the Federal Reserve's new real-time payment network, and Ripple has been officially recognized as a DLT, distributed ledger technology provider that can support this system. Once Ripple secures the proper banking charters, XRP and RLUSD, Ripple's stablecoin, could connect directly to FedNow, FedWire, and other payment systems. This means XRP could play a critical role in streamlining payments at a national scale, potentially handling trillions of dollars daily with instant settlement. Institutional adoption continues to grow. Exchanges like Bitrue have reported a 212% increase in XRP spot purchases, driven by both retail and institutional investors. Even during market downturns or Bitcoin ETF outflows, XRP has consistently attracted inflows, showing that serious investors recognize its infrastructure value. Unlike speculative crypto, XRP is being used as a tool for real financial operations, which creates long-term demand and stability. Another important point is interoperability. The future of finance isn't about replacing old systems overnight. It's about layers of integration. RippleNet works alongside traditional rails, central bank digital currencies, and tokenized assets. XRP ensures liquidity across these layers, allowing banks to gradually transition into a more efficient digital system without disrupting existing processes. Now that we've explored RippleNet and real-world partnerships, let's turn to institutional adoption, one of the most important indicators of XRP's long-term potential. While many cryptocurrencies are driven largely by speculation, XRP is seeing consistent interest from major institutional investors, which sets it apart. This is key because institutions bring volume, credibility, and stability to the market. Recent reports show that even when Bitcoin and Ethereum experience outflows, XRP continues to attract inflows. Exchanges like Bitrue have recorded a 212% spike in XRP purchases, driven by institutional appetite. Investors are allocating capital into XRP because it is infrastructure focused, meaning it's essential for cross-border settlements, tokenization, and integration with traditional banking. Unlike purely speculative assets, XRP's value is tied to real-world usage. In addition to XRP, some other infrastructure-focused assets like HBR and Solana are seeing strong institutional flows. Data suggests that roughly 50% of flows go to XRP, 30% to Solana, and 20% to HBAR, highlighting how institutions are prioritizing digital assets with practical applications. This trend shows a shift in mindset. Investors are now looking at crypto not just as a way to make short-term gains, but as a tool that enables real financial operations at scale. Part of this adoption story is also about tokenized assets. Traditional financial giants such as JP Morgan and Bank of America are exploring how to tokenize equities, bonds, and other financial instruments. XRP's ledger is uniquely positioned to support this because it was designed for enterprise-grade cross-border payments from the beginning. Real-world asset tokenization is no longer theoretical. It's happening now, and XRP is at the center. We also need to consider ETF holdings. Currently, there are around 792 million XRP locked in ETF vaults, indicating strong confidence from institutional investors. Even though retail interest may fluctuate, institutional holdings show that serious players believe in the technology and its long-term potential. This is a critical sign for anyone watching XRP's growth trajectory because it signals sustained demand beyond hype cycles. Another important factor is integration with U.S. financial infrastructure. Ripple is officially recognized as Distributed Ledger Technology, DLT, capable of supporting the FedNow initiative, which enables real-time payments 24/7, 365 days a year. Once Ripple secures necessary banking charters, XRP could connect directly to FedWire, FedNow, and other US payment systems, potentially handling trillions of dollars daily. This is huge because it shows that XRP is not just global, it's also positioned to become a key part of national payment systems, bridging traditional and digital finance. Now let's zoom out and look at the bigger picture. Everything we've discussed, tokenization, institutional adoption, RippleNet integration, FedNow connections, ETF holdings, points to one clear conclusion: XRP is being positioned as long-term financial infrastructure. This is not about short-term price pumps. This is about building the next version of the global financial system. Financial systems don't change overnight. They evolve during times of stress, economic crises, inflation, geopolitical shifts, and technological disruption. We are living in one of those transition periods right now. Governments are exploring central bank digital currencies, CBDCs. Banks are experimenting with tokenized assets. Payment systems are upgrading to ISO 2022 standards. All of this signals one thing: the world is preparing for a more digital, faster, and interoperable financial system. XRP fits directly into that transformation. It acts as a neutral bridge asset, meaning it can connect different currencies, blanes, and financial systems without bias. Instead of replacing legacy systems like SWIFT immediately, XRP integrates in layers. Old systems remain, but they connect to faster blockchain-based settlement rails. Over time, liquidity becomes abstracted, costs drop, and settlement speeds increase. This is how infrastructure evolves. Quietly, gradually, and then suddenly it feels like everything changed at once. Another major development is the rise of AI and digital agents. Experts are predicting that AI agents could double or even multiply transaction volumes in the coming years. These agents will transact automatically, making payments, settling trades, and executing contracts. For that kind of high-speed digital economy, you need instant settlement and reliable liquidity. That's exactly what XRP provides. Ripple is already positioning itself within the AI-driven payment narrative, partnering with major financial networks and technology providers to stay ahead of this curve. We also can't ignore interoperability. The future financial system will include multiple blockchains: Ethereum, Solana, XRP Ledger, Stellar, and others, alongside CBDCs and traditional banking rails. They must communicate with each other. XRP's ledger was designed with interoperability in mind. It can serve as the advanced settlement layer beneath these systems, ensuring smooth cross-chain and cross-border movement of value. Without interoperability, tokenization at scale simply won't work. What makes this opportunity powerful is the size of the total addressable market. We're not talking about just crypto traders. We're talking about 5 to 6 billion internet users globally. We're talking about hundreds of trillions of dollars in assets that could eventually move on-chain. Even if a fraction of that value flows through XRP rails, the implications are enormous. However, it's important to stay realistic. Markets move in cycles. Retail excitement comes and goes. Prices can be volatile, but infrastructure builds slowly and steadily in the background. Institutional investors understand this. That's why they accumulate during quiet periods. They focus on utility, adoption, and long-term positioning, not daily price swings. So what's the key takeaway? XRP is not just competing as another cryptocurrency. It is competing as financial infrastructure. It's the plumbing behind tokenized assets, the bridge between fiat and digital currencies, and potentially a core layer supporting global settlement networks. When the next wave of financial stress or innovation pushes the system forward, XRP and RippleNet are already positioned to support that shift. If you've made it through this entire breakdown, you now understand something most people don't. The value of XRP is not just in speculation, it's in functionality and integration. And that's the real opportunity. If you found value in this deep dive, make sure you like the video, leave your thoughts in the comments, and share this with someone who needs to understand where finance is heading. Thank you for being part of We Are Cosmic. We grow, we learn, and we evolve together. I'll see you in the next one.